morning. It's Mary Ellen McGonagle, and you're watching the MEM Edge Show. And this is the show where we put you in front of where the action is in the broader markets. And pleased to say that we have another positive day in the books so far, and this bullish uptrend. Let's go ahead and take a look at what we are going to be reviewing today. The first is our usual review of where the current markets are. And as I've said before, you want to make sure that the broader markets are in a healthy phase. They're in an uptrend in a period so that when you do put your money to work, you have the markets behind you. And then we're going to go ahead and take a look at a newer feature in stockcharts.com. It's the industry summary page, and I'll go ahead and show how very quickly you can get in front of potential candidates using this summary page. And then from there, we're going to take a look. There are still about 200 companies that are due to report earnings this week. We're certainly trailing into the end of Q1, but about 3 of them are rather relevant. So we'll go ahead and take a look at those companies and discuss what impact their earnings may or may not have on the broader markets. And then also how to play the current strength in semiconductor stocks. For those of you that follow the market super closely, you may have noted that last week, semiconductor stocks were up over 5%. So we'll take a peek into how you can potentially participate in that strength. And then lastly, hopefully we'll get time to this. I want to take a look at some of these FAANG stocks. They really have picked up recently, certainly over the last several weeks. So we can go ahead and analyze these stocks and take a look at the one within that grouping that looks the most appealing technically. So lots to go ahead and take a look at today. So let's go ahead and start by taking a look at the broader markets. What we are looking at here is a daily price chart of the S&P 500. I know I have a lot of markings here, so let me go ahead and explain. When we are looking at a daily chart, each one of the bars on the chart is representing 1 day of trading activity. I've gone ahead and overlaid these simple moving averages on top of the display. The green is your 10-day simple moving average. The red is the red is the 50-day simple moving average. And then this blue line is the 200-day simple moving average. Now, I know it looks like a lot of action in here, but a couple of key components that you do want to pay attention to, and that is in the shorter term, this 10 days, very simply a smoothed out version of the last 10 days of price history. So we want the index to be trading above an upward trending shorter term key moving average. And of course, we do have that taking place. I have this dashed pink line in place here because what occurred last week is yet another bullish move in the S&P 500. That is, the index broke back above this November high. So when you're looking at downtrend reversals, you're going to have a lot of potential upside resistance. The first areas of resistance are going to be these moving averages. So we broke up above the 50, we broke up above the 200, all quite bullish. Then these prior highs become potential resistance. So we broke above the December highs. Last week, above the November highs. And our next area of potential resistance is going to be this October high, this actual prior high in the index pricing. And if we are able to break above that, it would be really super bullish. But we are currently in a bullish uptrend. And again, you can see, as I talked about, we broke above that prior high. Let's take a look up here. I have what's called an RSI. That's a relative strength indicator. It's going to provide you with information relating to momentum. We want the RSI line to be above this dashed net neutral, this 50, also trending upward. We do in fact have that occurring. So the RSI is positive and in good standing. And then down at the bottom, I have another momentum indicator. This is stochastics. 2 items here. You want to pay attention to the black line up through the red. Also the position above this neutral 50 into positive territory. So we do have that phenomenon occurring as well. And we can see that last Friday's break above that November high was on volume. So we have a lot of bullish action occurring here in the broader markets. So from certainly that point of view, you can get a sense that you would be well served to be involved in this bullish market. Now, let's go ahead and take a quick look at another view of the markets, because now we know that the broader markets are healthy. Let's go ahead and drill down behind the scenes, so to speak. So what we are viewing here is what is called candle glance, accessible from that initial interface page on stockcharts.com. And what you can do is go ahead and populate down here various ticker symbols. And what I've done is I have each of the various indices, the NASDAQ, the Dow, the S&P, and then also various sectors. So the XLK is for technology, financials, healthcare, and so on. And while all of that is interesting, what I like to do is go ahead and add an indicator on top of that. And I've gone ahead and added the RSI, that relative strength momentum indicator, sort it by descending. So within the indices as well as the sectors, you're very, very quickly able to spot strength to weakness. So up here in the upper left quartile, you have your strongest, and then so on down to the weakest. These are 2-month daily snapshots. And interestingly enough, take a look at this first group here. This is utility stocks. And for those of you not familiar, utility stocks do tend to be more defensive as far as investing in these names. The average yield of the utility stocks is 3.3% using XLU. That's the S&P Utility Index. So you can see that there has been a very, very confirmed uptrend in utility stocks for some time now. What I'm going to do now is take you to the weakest subsector grouping down here on the lower right. This is a snapshot view of the yield for the 10-year Treasury. Take a look at this general decline, and we can see that the 10-year yield is at about 2.6%, super low. So that 3.3% on average among the utilities is going to be very attractive as an alternative. So it is more of a yield play than a defensive play, because take a look at this next strongest sector here. It is technology. Technology stocks up almost 5% last week. Super strong, big move. We talked about the semiconductors. We are going to drill down into this later as far as uncovering even further, refining where the strength is within technology. Let's take a look. We have XLRE. This is your real estate sector that is coming up really strongly. This is another yield play. A lot of these REIT stocks are within this real estate area are going to provide you with some very nice, healthy yields. And then from there, we can see the NASDAQ, which is tech heavy, and the S&P, and so forth. So those were certainly the highlights that I did want to point out to you. Is technology, high growth stocks up here in the forefront with these yield plays also simultaneously up here in the forefront. So let's go ahead. I talked about sharing with you the industry grouping page. So what we can do is go ahead and take a look back here. I'm going to take you to that main page here on stockcharts.com. And what you can do is go ahead and scroll down. I'm looking at the upper left quartile here. Lots of wonderful preset screens here at your that you can utilize. So what I'm going to drill in here is the industry summary page. And this is a grouping of those sub-sectors that we mentioned, and it is designed and shown to you initially alphabetically. So what I want to do, and then also up here we can see, because I did not demand it any other way, it's showing us intraday the sub-industry groupings within a given sector. So let's go ahead and take a look. I'm going to modify this so that we're looking at 1 week. It's changed all of the metrics here on the far right side. And what we can do now is go ahead and drill down, and you can very quickly see, for instance, over the last 5 trading days, consumer discretionary really has languished for the most part. But now that we know, we got that snapshot view, we know where the strength is within the markets. Let's go ahead down to technology and take a look, because it is going to show us over the last week, and you can see, highlight very quickly where the strength is given this percent increase. Now, the reason I'm taking you to the last week is because we want to get a sense of where the strength is on a longer term rather than just today. And this strength, from a lot of my work, where you see these bigger moves, oftentimes those moves can be very sustainable. Now, I know computer hardware, we can just dip in. I'm going to bet that it's Apple. But what you can do is click onto that sub-industry grouping. It will change this snapshot chart. But what we want to look at is this far right circle, and it's going to provide us with each of the stocks that are in this sub-sector computer hardware. So initially, it is going to show you by performance over the last week. But what I want to do is sort it by this SCTR. This is Stock Chart's technical rating, super powerful rating. And what this will do is provide you with those stocks that are the most technically sound within computer hardware. Then we can go ahead and take a look at the view here by hovering over the ticker symbol. And then from there, we can go ahead and drill down. You can, over here on the left, just go ahead and click and take a quick peek at one of the stocks. Now, this is MRCY. This is Mercury Systems. And what we can see here is the stock gapped up back here at the end of January. This is earnings driven. They came in with super strong earnings, and very similarly to a lot of powerful stocks that came in with good numbers, the stock continued to advance beyond as analysts continued to revise estimates higher. But now let's go ahead and take a look, because more recently the stock really kind of consolidated, gave up a lot of these gains, did not give up all of them. But what we can see is occurring, we're looking at a daily price chart. The stock price, I talked about these key moving averages. Similar to the indices, you want the stock price to be trading above these key simple moving averages. This green line is your 10-day simple moving average. So what we can see is last week, the stock's price broke back up above that 10-day simple moving average, in essence, potentially reversing this 3-week downtrend. And when you can marry that with the other technical indicators, in this case, the RSI simultaneously broke up back above that net dash neutral. And then also down here, we have what's called the MACD. That's your moving average convergence, divergence. 2 items you want to pay attention to here. That is the black line crossing up above the red. So we can see we're poised to do that. That's a positive crossover. But we also want that to occur above this net neutral zero. It's hard to see, but the MACD is in positive territory because it is above that zero. Oftentimes when stocks consolidate or pull back, you'll see that MACD just kind of magnetized toward that net neutral, but it is still up here above zero, positive territory. So if we can get this black line crossover, positive up through the red, and in conjunction with these 2 other bullish actions, you really can get a sense that this stock could resume its uptrend. One other quick item I'm going to go ahead and do here is annotate, because there is a third possibility here, and that is the stock could be poised to break out of what I call a base. So in this case, I'm taking you here. So the stock price did get up as high as 68, and before consolidating or pulling back, and now more recently it is potentially forming the right side of that base. So if this stock were to break out to a new high above that 66 in conjunction with these other positive indicators, you in fact could very well be off to the races. So hopefully you were able, we can certainly drill into, let's take a look at going back to that industry group page, and we can take a look at some of these other stocks. Now, Roku is another name. I'm going to go ahead and pull this one up. They did have an upgrade last week, but this one is not as compelling. We can see the stock had this gap up here, very well may be earnings related. Oftentimes that's what the case is. We can see the RSI never really got negative, but we really have more of just a wedging action that's taking place. The price is still below this 10-day simple moving average. Your MACD is above this 0, but I will tell you the stock from my work is not as compelling as the earlier stock that we reviewed. So let's go ahead back into this industry sector, and we talked about utility stocks being up in the forefront. They're a compelling investment for those of you seeking yield. So let's go down to utilities and see how we can use this same 1 week view on this industry summary page. So down here, because it is alphabetically, we have the utility. This is taking a look at last week's move. So for my work, I like to go to the multi-utilities. These are going to be a bit more diverse. They're going to provide utility services, be it electric, alternative, and more in the way of potential revenue screens. So now I've clicked onto the name of this sub-industry grouping, and it provides us with a chart, but we want to use this industry members list. It's not a big list. The utility sector is not that large, but again, we are going to want to sort it by that scooter. These are the more technically sound names that are up here, up in the forefront. And let's go ahead and take a look at WEC. And we can see that this particular stock is in a very sound uptrend, finding support. This is a daily price chart. You can see that the stock, as it continues to advance, it is finding support at this upward trending 10-day simple moving average. Now, up here we have the RSI. Once it goes up above 70, it's indicating that the stock is what is called overbought. You can see that it can retain and stay in that overbought position for a great length of time. So it's not overly concerning, but it is with an eye toward a sense that the stock may, in fact, at some point pull back. We can go down here to the MACD, very much in a positive standing up above this net neutral 0. So you can see that while it has advanced already for a good 6 weeks, it does appear to have more upside ahead of it as it continues to find support at this upward trending 10-day simple moving average. So that is that industry summary page. We are going to go back to it because I want to show you how to get into taking a look and reviewing some of these semiconductors. We want to be able to drill down and view the most technically sound names there. But before we do that, I talked about earnings season. There are a couple of stocks that are due to report this week. So I'm going to go ahead and show them to you so that you can be aware of what to be on the lookout. This first one is a company called Tilray, T-L-R-Y. The stock really has not done a whole lot here recently, but the significance for this stock, this is a cannabis related stock. And so again, technically the stock, the chart is not really showing us anything super compelling. It's more conceptually the sense that this is one of the larger names within this cannabis industry. So there's going to be a lot of eyes on this earnings report to see. They are due to report after the close today. They're estimated to report about 14 million in revenues. And while that's not a huge number, it would be a 40% sequential increase. They reported 10 million in their last quarter as far as revenues. So again, looking at Tilray, because there are certainly a number of other cannabis related stocks that are out there that are being traded actively and looked at. So you'll want to, if you're interested in that industry, keep an eye out for this company due to report after the close today. Another one that is probably not as well known, and this is STNE. This particular stock is Warren Buffett. They're also due to report today. They are a Brazilian payment company, similar to a PayPal here in the US, but they are over in Brazil. It is an IPO. Warren Buffett bought in pretty big to this company. He's an 11% owner, and we can see that the stock is up about 4% today, but more with an eye toward keep seeing how they come in with their numbers because of the, again, the ownership. They are due to report after the close today. Let's take a look at another bellwether name within the transports. That's FedEx, FDX. They are due to report after the close tomorrow on Tuesday. And let's take a look going back here. This is their previous earnings report in December. They missed this at this particular juncture. They cited global business was down. They also subsequent to this earnings report, they cut their earnings staff and they did a lot in the way of tightening up the ship, so to speak. So there will be certainly a lot of eyes to see if some of the modifications they made after this drop have taken hold, or is global growth still slow enough to potentially keep the stock from gaining. But what we can see is technically the stock is above these simple moving averages. So it's kind of sitting here quite pretty. Again, after the close on Tuesday, interesting to see how they report. A lot of times I like to take a look at some competing stocks to see how they may have fared. This is UPS. And UPS came out with numbers in January, and we can see that that would take us back to this January period here, that the company did come out with good numbers, and since then has been pretty much able to be in an uptrend. So we'll keep an eye out on FedEx after Tuesday. One last one is Micron Mu. And the reason I am pointing this particular stock out is because this stock is a bellwether among semiconductor stocks. And what do I mean by that? Well, I mean that a lot of times the earnings and the reports that come out with Micron will impact the broader semiconductor markets. And we talked about the semis being in a bullish phase. They had a good week last week, but here is Micron. They are expected, they're going to report after the close on Wednesday. The markets are expecting the company to report a loss. Has everything to do with weaker semiconductor chip prices. So a lot of analysts think that the loss that there is anticipated has been built into the price, because we can see that Micron is languishing. It is not really participating with, let's take a look at the Semiconductor Index just to give you a comparison of how Micron is looking compared to the broader industry. This is the semiconductor ETF, SOXX. Take a look at this. This is that gap up, huge, strong week last week. And in comparison, of course, Micron is down here languishing. So that's one that is due to report later on Wednesday after the close. So we'll keep an eye on that one. So let's go ahead and talk about and drill down into, since we are on the topic of semiconductors, what I'm going to do here is go ahead and show you a way that you can get in front of these semiconductors, get a feel for where the strength is among the stocks within that grouping. So we're going to go to sector summary, and this is providing you with those S&P sectors so that if you wanted to populate that candle glance chart, you can get the ticker symbols here. But what we want to look at is the technology sector, and then we want to look at the sub-industry grouping semiconductors. So by clicking on that name, the semiconductor subgroup name, here we are listing with all of the stocks within the semiconductor industry. So our first sort, what I like to do is sort it by scooter. But before we do that, let's go ahead and sort it by market capitalization, because for those of you that like to traffic in larger stocks, more liquid, what I've done is sorted it so that we are presented with those large cap names first. And then what you can do is take a peek at these scooter. Again, the higher the better. Xilinx is a very strong stock within there. We can take a look at this particular stock. It had this big gap up here on earnings back at the end of January. has continued to find, for the most part, this is that pullback a week or so ago, but for the most part in a very clear-cut uptrend. This is your leadership stock within semiconductors. And we can see the RSI, your MACD up here in positive territory. Let's go ahead back to that list again, because I want to show you looking here at another large cap name that has really picked up here of late, and that's Intel. And we can see this too is finding support at an upward trending 10-day simple moving average. Your RSI is positive, MACD is positive. So one last sort, because I did want to take a minute and review those FAANG stocks, but we are in here with the semiconductor. Let's go ahead and sort it simply by scooter without any attention to the market cap. And we can see again up here in the forefront, these are your technically more sound stocks. And I will tell you, for the most part, they're also going to be fundamentally your stronger names. Let's take a look at Lattice Semiconductor, LSCC. Here's this big gap up on earnings. The stock is continuing to find support. It does appear at this juncture to be consolidating more in a sideways move than poised to have an explosive upward move. But certainly we can drill down and hover over the ticker symbol and take a peek at some of these other stocks. A lot of them are hitting new highs, so they may not be quite as compelling as a name that is, let's take a look at Lam Research, LRCX, still a pretty high scooter. But what I wanted to point out here is it had a nice uptrend in line with semiconductor stocks. But last week, we had that gap up that you can see here in price. And so what this did, in fact, prior to that, this has everything to do with the broader markets picking up here in the semiconductor space, because they reported earnings back here. That's this gap up. So yesterday, last week's gap up may very well be news related, but what it has done is broken this stock's price back up above this 10-day simple moving average. Take a look. That MACD is poised to have the black line cross up through the red very positively, and you have your RSI in positive territory. So this one might be a bit more of a compelling name. Let's go ahead and take a moment, because I do want to look at some of these FAANG stocks. For those of you not familiar, that's Facebook, Amazon, Apple, Netflix, and Google. So we'll start out with Facebook. I'm going to have to move through this fairly quickly, but we can see Facebook is languishing. This has everything to do with last week's unfortunate massacre in New Zealand that was published for 17 minutes, and Facebook was not able to get in front of that and stop it. And so there's been a lot of concern about their ability for privacy and so forth. Prior to that, the stock was picking up. So that is one that is not going to be as interesting. Let's move on. I want to get to Apple. This stock picked up about 3 weeks ago. We can see this, and then it languished. But take a look. This is taking us to last week's action, and it is continuing in this uptrend. This particular pickup here in Apple occurred because an analyst was pointing out product developments. They have 9 new products this year, and then next year a super big potential product. So analysts are getting interested in this stock again. We can see it picked up quite nicely last week, but it is just now hitting up against that 200-day simple moving average, and that could very well act as an area of potential resistance. You want to keep an eye out on that. Let's take a look at Amazon very quickly here. We can see Amazon today breaking up above that 200-day simple moving average into bullish phase. Google is the one that I did want to get to, because that also looks super attractive, breaking out of this longer term base. I will have to leave it at that. For those of you trading, happy trading.
Join us April 1st to April 5th to celebrate our 20th anniversary here at StockCharts.com with special guests Arthur Hill, Greg Morris, Gaddis Rose, Martin Pring, and John Murphy.